The long sterling trade seen at the beginning of this week has been halted in its tracks as Bank of England Governor Mark Carney went rogue and decided to make a unilateral announcement that the Bank of England may not be raising interest rates on the 10th of May when it next meets, an event that the market had thought was a likely event. Chris Watling joins us out from Longview Economics. He's chief economist and chief market strategist there. What do you think, where are we in terms of interest rate rises here in the UK? I mean, the markets, as I say, going into the meeting on the 10th of May, I think it looked likely that it was going to happen. Then all of a sudden, you get this statement from the guy in charge. Where do you think we are?
Well, I mean, we were clearly in the camp before from the Bank of England that it will be gradual and fairly measured. Every so often they'll put up a rate hike, and I think he's clearly sowing doubt into that timetable now with these comments that we had out over the last 24 hours.
The data coming through this week might be supporting this view. I mean, weaker than expected CPI. Inflation had been one of the big issues to why we saw that interest rate rise anyway late last year. Retail sales not as strong as expected, and the jobs numbers and whatever. Yes, we got average hourly earnings creeping up a bit. Yeah. What do you think the data tells us?
Well, I think the data is telling us that the UK economy, and in fact, indeed the global economy, particularly the Chinese and Eurozone economies, can't take much in terms of rate tightening. So we've had quite a lot of tightening priced into curves across the globe, in the UK and the Western world in the last 12, 18 months. And we're now seeing slowing global economy, in my opinion. I think the global interest rate curve, I think, has peaked. And the UK, I think, is one of those economies that's very, very sensitive to tightening. And I think the data's starting to demonstrate that.
And you think that because of what? Because of the amount of debt that we've got?
Yeah, we're over-indebted. I think structurally we're one of the weakest economies in the Western world, really. Housing's very expensive. You know, you look at something like sort of mortgage approvals in the UK. They've been flat for 3 years. 4 years now. I mean, so there's no structural oomph upwards in the economy, really. So it's very sensitive to little hikes and little pricing in of rate hikes.
Yeah. Let's bring up a chart of sterling against the US dollar. We spoke about this earlier this year, Chris, about this, and you were talking about the opportunities, perhaps possibly maybe to short this market. Technically, we've seen this head and shoulders not develop in the way I thought perhaps initially it was going to. Normally, a head and shoulders will resolve on the upside, and this sort of pattern here, we got it pulling back. It's come back through the neckline. We've got this supporting line here, which is now broken, and that's forming an upward-facing wedge, which technically is a bearish indicator. As I said, you and I were talking about this at the beginning of this year, and you were saying there could be some shorting opportunities. Would you go short at 140.50 as where we are?
Well, I mean, it depends on your time frame, but I think if you're a 6-9 month time frame person, I think this area 138 to 145 is all a shorting opportunity. As I say, structurally, it's one of the weakest economies in the Western sphere, in my opinion, and it won't do well in the face of interest rate hikes. We'll be the first to roll over, and the currency, I think, will reflect that. So whether or not you go short today on a 1 to 2 day basis, who knows? It's probably quite oversold in the near term, but on a sort of multi-month. For sure, this is a big level. It's a crowded long. Sentiment's very bullish sterling, very different from where we were at the beginning of 2017. And I think this is an opportunity. I go short this currency, absolutely.
Chris, we'll have to leave it there, but thanks indeed for joining us. That's Chris Watling from Longview Economics, where he is the Chief Executive and Chief Market Strategist.